You need to get rich, and you need to get rich quick.
No, this is not another get rich quick scheme video. This is not that. And you might be asking, why am I staring at a screen of Riot platforms? Why is this guy just popping out of nowhere? And I just got baited by the thumbnail and the title saying I could get rich quick just off one stock. Well, you can get rich. Well, not rich is not a good word. You could get wealthy. But I am not here to teach you how to get rich quick, because getting rich quick is only going to happen if you buy that one crypto that blows up out of nowhere that you somehow found out is going to make you money. Or you start a business and somehow it just blows up. Or you could just listen to what all these other guys that you saw in the beginning of the video are going to tell you, which is start an SAS company, open up your Shopify account, start drop shipping, Amazon, all that stuff. That stuff will not get you rich quick. You know what will get you rich quick? Being consistent on one stock and trading it and learning it and just doing it over and over and over until in a couple years. I'm not saying until retirement. Nobody's talking about retiring with $1 million. We're saying 5-10 years of consistent trading, investing. You're gonna have that $1 million you want, that Rolls Royce, whatever you want to buy, you'll have it if you just trade on one stock that you choose with high volatility. And I'll even give you an example of a stock that you could trade. So let's go ahead and get into this video. So what's the stock and strategy we're going to be using? Well, the stock obviously is on the screen. It's Riot Platforms. This is a stock that I trade personally. You could find any stock you want, any stock that makes you enough income for you to be happy. Riot is my stock, right? Riot has an IV, implied volatility of 95% of making this video. 95%, yes, is high. And of a 52-week high, it was at 105% implied volatility. This stock is traded so much, it moves around so much that the income you're making from the strategy we're about to go into is insane, okay? Now, what's the strategy we're going to be using? It's quite a simple one. It's the wheel strategy, the options wheel strategy. What it is just you're selling covered calls on a position that you might have. Say you have 100 shares, you sell covered calls on it. And then you also sell puts on it. And you just recycle that over and over. And we're going to get into the details of it. But it's pretty much that simple. You're just doing an options wheel strategy on Riot platforms. You could get it through level 1 trading on Robinhood or any other platform you have, like Fidelity. I do this for other accounts as well on Fidelity. It's the same thing. It's literally a great strategy you can use. And we're going to go ahead and do a breakdown of it right now on Riot platforms and how I use it to make myself weekly and monthly income. Let's go ahead and get more into it. Alrighty, so what is the option wheel strategy? Well, the option wheel strategy is obviously an option strategy. If you know anything about trading or stocks in general, you probably know what options are, right? You could unlock them at level 1 trading when it comes to, Robinhood, Fidelity, all these different accounts, Webull. So it's not that difficult to get, right? So once you got your options trading strategy, you can start trading the wheel strategy or the cover put wheel strategy. There's many names to it, right? It's an option trading strategy that is often used by traders and investors to potentially generate income from a stock that they are interested in owning or already own. This strategy is typically used in bullish environments or neutral environments, so stagnation. Not really in bearish. You could use it in bearish environments like we are in now. It's a little bit harder. I'm doing it at the moment and it's kind of working out. There's moments where you get a little bit too close of, having a little bit of loss that you don't really want, but overall it does work out, right? So how does it start? Well, the first step is doing a selling a cash secured put. Cash secured put is you're giving up a certain amount of cash saying you're going to buy this stock at this given price, and we're going to go over which strike price you really want to sell at. We're going to go over that once we start looking at Riot stock itself as an example. So yeah, you sell the cash secured put. I usually do it for a week or 2 weeks. And once again, we're going to go over that more. And what happens when you sell your cash secured put? Well, there's 2 ways that it could play out, right? You either don't get processed, right? So it doesn't reach the strike price, and you don't get assigned. So if you don't get assigned, then you do it again, right? Rinse, repeat, you keep doing it. And if you do get assigned, no biggie. You get assigned, you collected your premium, now you own 100 shares, right? You already put the cash up for it, so it's no biggie for you. You have 100 shares now, and now you start trading covered calls on it. And once again, it's rinse, repeat. Now you're making income on the covered calls, you're making premium. And what happens with the covered calls? Well, if the covered calls at end of expiration day get assigned, then you sell your 100 shares. And at all of those times, you're in the profit, right? Unless you're, selling strike prices under what you paid for the stock, then of course you're going to lose, right? Of course you're going to lose value on that. But if you're trading higher than what you paid for the stock, you're going to win. You're in the profits. You're getting premium and you're getting the growth that you got from the stock selling at a higher price, right? And you just rinse, repeat. You keep doing it over and over, as you can see on the graph. You keep selling covered cash covered puts, and you keep selling covered calls if you get assigned. And you just rinse, repeat, and rinse, repeat. And if you're doing it on stock with a high volatility like Riot is, which is like 95%, then you're getting a pretty good premium off every single trade you do. And we're going to go ahead and get into that. So let's go ahead and start looking at Riot as an example. All right, so for the example I'm using for this video is Riot. I trade Riot. I do option wheel strategy on it. And to be very clear, of the month of October, I'm not going to go all the way back for the whole year. That's a lot of money to count. But for the month of October, for the half month that we've been through, and another half that's left, for this half, we've made $375 so far. And it's a pretty good amount. And I'm going to continue doing it. And I just want to be very clear. Just know I am trading this. I am doing this strategy. So I'm not telling you guys to do something that I'm not doing. So let's go ahead and get into it. So Riot Platforms, why did I choose Riot Platforms? Well, Riot Platforms has a volatility of 95% as of making this video, and a 20-week high of 100%, I'm pretty sure 105%. So it's pretty high volatility. It's traded a lot. Now, what is Riot stock? Well, I'm not trying to sell you this stock. You could choose whatever stock you'd like. But Riot trades on Bitcoin, right? It trades off Bitcoin, crypto. It's a company that mines Bitcoin, crypto, all that sorts, right? They hold it, they mine it. So they're pretty volatile, such as is Bitcoin. But another good thing is that it's the stock itself. It's traded on, S&P 500, all that stuff. Pretty nice, and therefore it moves similar to what the S&P 500 does. So you have two benefits. You have the movement of Bitcoin and the movement of S&P 500. So you're reaping two sides. You're getting two benefits, and that's why I trade it, right? So since you have the high volatility, you get high premium. So let's go ahead and get into that. Let's get into the premium and what I'll be earning and what strategy I would use for this stock in particular. Alrighty, so taking a look over to Riot, as we learned before, we have to start with selling cash secured puts. When we go over to Robinhood and we look at the options screen, this is how it looks like if you've never used Robinhood. We can see that Riot is trading at $8.83 as of making this video. It's a Wednesday, so when it comes to expiration dates, we're not going to choose the one expiring this Friday. It's a little bit too short term. We're going to choose the one expiring next week, or if you're trading for yourself, you could choose the next week after or the month or whatever you want, right? I trade weekly, and that's what I do. So we're choosing the next week over, so it's October 27th next week, 9 days away. So we're going to go ahead and what are we going to choose? Well, if it's $8.83, me personally, I look at the chance of profit on the middle of the screen, and I usually go between 70 to 90%, right? This time around, 83% is only paying me 12 cents a share. I want to go a little bit better, so I'm going to do 75.84% chance on the $8 strike, and I'm going to pick the $22 one, right? So I'm going to pick the $22 one, and I'm going to get $22 for the option strategy. Of course, there it says 22 cents, but don't forget, you times that by 100, since every contract is 100 shares, you're getting $22 premium for selling that cash secured put. You're giving away your $800 as collateral, which is being held until next week. So that's the way I would do it. But if you want to be a little bit more, risky, you could go for the $8.50 one, which is going to pay you $39. Or if you want to be really risky, which I do not recommend, but you could go for the $9 strike, which is going to pay you $64. That's if you're really bullish on Riot. If you think Riot in the next week is going to go above the $9, which it has been trading, which I still don't recommend going for, but you could go for the $9 strike price, then you would get $64 premium. Once again, I don't recommend it. Now, if it doesn't expire, if it doesn't get put through by the end of the week, then you don't have to buy the 100 shares. If it does, then we have to go on to the next part of the strategy, which we're going to go and get into right now. Oh no, my shares got assigned. I have to bind this contract now for $8 strike price. What would I ever do? Well, you do the next part of the strategy, right? You start selling covered calls on it until you either exit the position or you just keep collecting the premium, right? So say, in this case, of course, Riot's still at $8.82. So say you bought a strike price of $8.50, right? Now you own the shares for $8.50. What's your next step, right? So say Riot is at $8.82 now. You're already in a profit, right? You're already making a profit of 22 cents, 32 cents per share, whatever, right? You have 100 shares, right? And if you look at the screen, you can actually see the contracts I have for next week, which I put through today, and that's 9 of them right there, right? The 900 shares I have 9 contracts of it, making myself $20 per contract, which is $180. Or in my case, I did it a little bit early in the morning, so it was a little bit higher than that. It was more in the 200 range. And look, it's 82% chance of profit. That's a pretty good chance, right? So taking a look at it, say you have the $8.50 strike price, you just got assigned to it. What are you gonna do now? Well, you're gonna go ahead and sell a covered call on it, right? What covered call are you gonna pick? Well, you pick the same one I did, right? Look, 82% chance you're getting paid $20 per share, or per contract, sorry. And it's a pretty good amount, right? Once again, you're getting $20 premium for that one share. If it does hit that strike price, right, you're going to go ahead and sell it, right? You're going to go and sell it for the $10, 10 subtracted by $8.50. You just made $1.50 per share profit, right? And you just got a $20 premium for it as well. It's a win-win. Now, say it doesn't hit it, then you keep doing covered calls on it, right? You keep doing it and doing it. The same thing you were doing with the cash covered puts, you're doing with the covered calls. You keep doing it over and over every week until it sells, right? Until it goes away, right? And then you repeat it again with the cash secured puts. Now, again, if you want to go riskier, you want to make more premium, trying to hunt that premium, which I do not recommend, but you can do. You could go for the 31 cent strike price. Strike price of $9.50, sorry. That pays you 31 cents in premium, or $31 in premium. Or if you want to go even riskier, you go for the $9 strike price, which pays you 47 cents in premium, or $47. And if you even want to go even more riskier, if you're bearish, this is where it wins to be bearish, right? If I was a little bit more bearish today in the morning and I went for that $9.50 call strike price, I would have made more, right? If you're a little bit more bearish, you could go for the $8.50 strike price and make $73. That's if you think Riot's going to go down, which at the moment it is, sadly. That's what you could do. So that's the strategy. That's pretty much it. I just explained you the whole options wheel strategy in a matter of, 15 minutes, right? 15-minute video. And now what are you going to do with this? You're going to go ahead and trade it. You're going to trade it on a weekly basis, bi-weekly basis, monthly basis, over and over and over. And you're going to pick one stock you like. It doesn't have to be Riot, right? Riot's a little bit volatile. You could go a little bit easier. You could trade on something else. It depends on your portfolio, how big it is, how small it is, what you are able to afford, what you're not willing to lose, if there's a chance of losing, right? What you're able to risk, right? So you just keep doing it over and over and over, and you're going to make income from it, right? You're going to make monthly, weekly, yearly income that's going to grow. You're going to take that premium you're making, you're going to go ahead and transfer it back over to buy more contracts and sell more contracts and go over and over and keep going and going until in a year's time, you're going to be making crazy income. And I'm going to go ahead and do the math for you right now. Let's go ahead and get into that. So here we go. I pulled out the spreadsheet. I did all the math. Here are your profits for a year, a month, and a weekly basis, right? Obviously, weekly, we're getting roughly $20. This is based off getting $20, which is the rough estimate of what you'll be getting. It depends on your risk tolerance, correct? So we're going for that 80% profit range on Robinhood. So $20 is our profit every week. Now, you multiply that since there's 4 weeks in a month, you get $80 monthly. You multiply that by 12 months, and for a year, you're getting $960. Now, you might be saying, $960, that's nothing. That's nothing. $960, what is that? I can't even get myself that Bugatti I want. Andrew Tate tells me I gotta ride on that Bugatti. Iman Gassi tells me I gotta get that Rolls Royce. I gotta start that SAS business. I gotta do all of that. I gotta get that money, right? I gotta make those millions. This is not gonna do me anything. Well, it is gonna do you a lot, because you see that right there on the bottom? Your investment was $800. Your percent return on your investment was 120%. So we're getting 100% back on your money. More than that, we're getting $960 out of the $800 you put in. You take that $960, you put it back in, now you're making double that, right? Now instead of $800 putting it in, you have $1,600 put in, and now you're getting a return of what? You're getting a return of $2,000, right? And it just scales, right? It scales up and up and up, and it all depends on how much you put in your portfolio. It all depends on your risk tolerance, right? I have 900 shares in it. My risk tolerance is a little bit higher, I would say, than other people, right? Right now, I'm down pretty bad on Robinhood, right? Robinhood's down, market's down. I'm down a good 20-30%, right? But I'm still making my income, right? I'm still making my $500, $600 a month. right? And for me, that's fine. That could pay my car bill, right? That could pay my monthly car bill. So I'm relaxed, right? My risk tolerance is fine, but I'm just showing that if you really want to make income, if you really want to grow, and you're looking at all these gurus online telling you got to start a business, you got to do this, it's simpler than that. It really is. And all it is just learning fundamentals of the stock market, doing an easy, simple strategy as the wheel strategy on a stock of your choosing. In my example, it's Riot. If yours, it could be anything else. If you have a larger portfolio, you can do it on the SPY. You could do it on the S&P 500 if you wanted to. And the premium there is insane. The return is roughly 30%. I've already done the math on it, but my portfolio is not high enough to do that yet. But you could do it on SPY, and that's a pretty good stock, or ETF to do. It's S&P 500. It's not going anywhere, right? It's not as volatile either, so it's steady income. Now, if you want to go a little bit risky, like I do with Ryan, and get a higher, you go with Riot, right? If you want to do something in the middle, you go for SoFi, you go for American Airlines. I don't know. You pick your thing, right? Some people do it on Palantir. Everybody has their own thing, right? Tesla, even. I wouldn't recommend that, but you could do that, right? It just depends on your portfolio. It depends on your risk tolerance, and you can make good income. In a year, 5 years time, right? You say you start early age, you start in your 18s, 20s, right? In 5 years, 10 years times, you're in your 30s, 25, somewhere around there. You're making what, a clean 2,000, 3,000 a month, maybe more. It depends on how it goes, right? If Ryan goes up in price, if the stock you're trading goes up in price, you're getting more premium. You grow with the stock, right? This is the best thing about the strategy. That's why you have to be bullish on a stock. You can't be bearish, because you want the stock to grow. You want the premiums to grow. You want the value of the shares that you're buying to grow, because then you're selling it for more premium and you're selling it for more profits if you're holding shares, right? And if you're selling cash covered puts on it, and if you're selling covered calls on it, if you're just doing the options wheel strategy on it, you want the stock to grow. And honestly, I can't recommend this enough. I've recommended this to everybody. I even started doing this on my family's accounts. I've been doing it for them. Option wheel strategies. It's a great strategy. I highly recommend it. And, stop listening to the gurus. Starting a business is great. Doing all this other stuff is cool and all, but it's not going to get you that steady income you want. It's not going to grow your wealth the way you want it. So learn option wheel strategy. After watching my video, you could go watch some other videos. There's a lot of good videos out there, and I really can recommend taking a look at it. So that was me. That was my video. My name is Dennis Cooner. Thank you so much for watching. And if you guys want, I have another video on Riot itself, on the stock itself, and why it's such a good stock to trade. And you guys could go ahead and take a look at that as well, and look at my other stuff as well. So thank you so much for watching. I hope you guys like and subscribe. That was my video on option wheel strategy and how to become a millionaire off of it, and make millions off of it. And, in the future, just live off income, dividend income, easy income. So yeah, thank you so much for watching, and I'll see you guys in the next one.